Hi, everyone. I am beyond excited to kick off our first webinar of the new year with a powerhouse speaker who I'm going to introduce in a moment. As you know, Claudia and I have been doing a wealth and wellness series for a few years. So if you want to catch up on any of our prior shows, please visit bfguniversity.com. To start the introductions, my name is Lena Nebel, and I am the CEO of BFG Financial Advisors based in Maryland. And we now have a second location in North Carolina.
And I'm Claudia Glover. I'm the Chief Investment Officer and Chair of the Investment Committee at BFG Financial Advisors, and we're really excited to be here today.
And I know Claudia has gathered some questions from clients and our committee that we're going to address at the end of the presentation. So I want to get right to introducing our amazing speaker, Kara Murphy. Kara has a way, she makes the complicated uncomplicated. She's recognized for her ability to merge analysis with pop culture storytelling. And she's also known for creating elaborate market metaphors, including Barbie, Oppenheimer, and most recently, Willie Nelson, that we got to witness. And she definitely has some surprises planned for us today. Professionally, she is the CIO of Kestra Investment Management, where she leads the firm's investment strategy, market research, portfolio construction efforts. She's a keynote speaker at industry conferences, and you'll see her on TV, including CNBC, Bloomberg TV, Bloomberg Radio, Yahoo Finance. She can now add BFG webinar series to this long list as well. So she's one of my favorite people. We're absolutely honored to have her join us. So welcome, Kara.
Thank you guys, and thank you everybody for joining us. I know it's a lot to kind of take some time out of the day, and markets are not always top of people's brains or interests. So, hopefully you'll learn a few things. And I love to get questions too. So just to let everybody know, there is a chat box, right? Guys, they're able to everybody's able to see that chat box. So it should be on the bottom of your screen. If during the course of our discussion questions come up, please like put those in, and I'll have some questions for you along the way, where you'll be able to interact and kind of hear what other people are saying as well. So let's get started. There we go. Barbie, right? Like, what else are we going to talk about when we talk about markets? A couple of years ago, when the movie first came out, I sort of like re-explored Barbie. And as I started digging in, I was like, dang, I think I didn't really give Barbie the credit for the incredible brand that she really is. Barbie was first introduced in, I believe it was 1959. So she has a really long legacy. She has sold over $100 million around the world. She's had over 250 different careers. She is one of the most recognized brands in the world. Really kind of incredible for this one little doll. But I was like, 250 careers, that's a lot. But she's never been an investor. So it kind of got me thinking, like, of all the different careers, what if there were a Wall Street Barbie and what would she think about what's happening in the markets? And I'm curious. So this is going to be your the audience's first task. If you pull up that chat box, how many of you have seen the Barbie movie? It's been out now for a couple of years, and would love to see how many people have seen it. Often, I present to full of guys, and so it'll be when I ask this question, it'll be like the couple women in the audience, and then guys who have like teenage girls at home are going to be the ones who have seen it. So appeal to a very particular demographic. And you can see here, this is an image of the set. It is visually really gripping. They built all of these sets, and in fact, they used up so much pink paint that the industry ran out of pink paint altogether, and they had to manufacture more just to make all these different shades of pink. Um, but it became really iconic, and in fact, the movie won a ton of awards for set design, and the director, Greta Gerwig, made a very deliberate decision early on to not use CGI, which is sort of interesting because a lot of other directors would have taken that easy way out. I'm sure it would have been a lot easier and less expensive, but she wanted this idea of like artificial authenticity, right? So it's playing with this line between real world and fake world. And if you have seen the movie, this is sort of a through line with the plot. And so I thought it was a really interesting lens through which to think about AI and its impact on the real world, whether it's the economy or the markets. And as I mentioned, like Barbie's legacy is quite rich and goes back a long way. For those of you who might remember, this is actually the first Barbie dream house. And it was made of cardboard. You had to put it together, and it was meant to be really interactive. And when I see this, I mean, this looks like a place where I think I could have a lot of fun. Partly because there's no kitchen, I'm not gonna be tempted to actually cook dinner for my 3 kids, only to have them scoff at it, so this looks like a good place. This is the Barbie dream house that I remember growing up. I never had one, but I envied my friends who did. But what's interesting is that, all of these reflected design at the time. So it's another example of how Barbie reflected culture outside, but also impacted culture in her own way as well. And for those of you who have seen the movie, you'll know the main character is called stereotypical Barbie. And guess what? She looks like a stereotypical Barbie with like the long blonde curls, like the permanent high heels. And when she kind of like wakes up in the morning, everybody waves, "Hi, Barbie." When she drives down the street, everybody says, "Good morning, Barbie." And then when her and Ken get into a spat, all of Barbie land gets pulled in, right? So she is 100% the focus, kind of like Nvidia, right? So this is looking at Nvidia and a bunch of other areas of the market, beginning in 2023. So if you remember, 2022 was a bear market, so stocks are down quite significantly, but beginning pretty much from the first trading day of January 2023, you saw Nvidia and some of these other, we call them now Magnificent Seven stocks, just take off. So you can see from the beginning of 23 to end of 25, Nvidia was up 800%. And in fact, sorry, this takes us to the end of 2024. In 2025, NVIDIA has continued that run and just absolutely extraordinary. And think about it, NVIDIA used to be a semiconductor making chips for video games, right? This wasn't even on their radar a bunch of years ago. And so they've completely kind of refocused their business into AI and became essentially the only chip provider for these AI engines. And what that meant was that it has kind of left all of these other stocks in the dust. You can see other hyperscalers. We'll talk a little bit about those, but think like Meta, Alphabet, other semiconductors, so companies that make chips for things other than AI. These areas of the market did incredibly well over those years, but look dwarfed relative to what happened with Nvidia. All right, there we go. So what's happened is that as Nvidia and some of these other big names, Apple, Google, Meta, Tesla, as they've grown larger and larger, they've also become a larger proportion of the market overall and of the overall economy. So here we're taking a slightly wider lens and looking at the largest 50 stocks in the S&P 500. Now, from year to year, who is in that will change. But safe to say today, most of those are tech-oriented names. And what you see is those 50 names together are actually larger than the overall size of the US economy. Previous peaks that we saw were in December 2021, and also at the peak of the tech bubble. So what this is telling us is that these large names who are largely tech-focused have an incredibly important impact on the overall economy. All right, so here I'm going to ask you guys to open up that chat box, and let me know, have you used AI? So that can be ChatGPT, but any one of these other search engines like Claude or Gemini. Have you used it in the last 2 weeks for work? So this is a little bit different than just using it to find a restaurant recommendation, but specifically looking for using it for work. Okay, we have a few no's, a yes. Okay, yes, yes. Okay, so we have like a good number of yeses here. So interestingly, the Census Bureau started to take measures of this a couple of years ago. You'll see this data series starts in September 23. And the share of folks who are saying that they've used AI in the last 2 weeks for work has increased quite significantly. So over time, we've seen more and more people who are using it for something specifically productive. Now, if whether you have or haven't in the last 2 weeks, you expect to use AI for work in the next 6 months, right? So thinking about maybe you haven't experimented with it yet, but maybe you're interested in it. Okay, so I see some yeses, a lot more yeses for this one. So not surprisingly, right? Like more people are saying that they use AI. Here they're wording it to produce goods or services, but essentially to do something productive for work. Now, this is the most interesting question, and this is where I love to kind of see what people are using ChatGPT for. So, in a box, please share with me what are you using? And again, think about if it's not ChatGPT, I see somebody here is using Perplexity, whatever AI engine that you're using, what are you using it for? And I always find, like, such interesting examples that I haven't even thought of before. So somebody shared that they used it to pick out a new lighting fixture for their dining room. It had to be sized appropriately. They wanted to see it in the room, and they were able to use some of this image generation software to be able to look at it. Um, Another one that I found very interesting was somebody who was putting together a script to be able to explain to her daughter why she needed a curfew. Right? So sometimes people are using this to sort of enhance interpersonal relations, right? Like sort of maybe take your emotion out of that conversation a little bit and think about how you need to see your teenage daughter. I have two teenage daughters and a teenage son, so I can understand all of that. So I see like generating content, blogs, excuse me, programming, researching, communication, policy drafts, research, refined documents, text. So this is interesting. These examples are very specifically like text driven, which of course is what ChatGPT as a large language model was developed for. And so I think people are finding very quickly that you can write things at scale really quick. So here is another survey identifying users of ChatGPT and saying, okay, what are you using it for? And what you'll see is that, and they asked about work tasks, learning something new, or entertainment. So I remember first going into ChatGPT and just giving it like crazy questions to kind of see what came up. I also, if you use it a lot, try the prompt roast me. You might want to have like a glass of wine with you or something because it may be a little humbling. But it's really fun to sort of see ChatGPT create this image of you. So those are entertainment. And certainly we're seeing more people who are using these tools for entertainment. But it's interesting in that if you look at the tasks for work, that started as the lowest use case not that long ago. And as of the most recent survey earlier last year, that it was being used more often for work than it was for simply entertainment, right? So our um, the productive use of AI is only starting to make its way into the work world. So we're still very early stages of that. And if we compare this like incredibly fast technological revolution to others, I think it highlights just how quickly this has come on board. So we have our good friend Barbie here who took 30 years to get to 100 million dolls sold. That was a long time, right? And she is iconic, yes, but it didn't happen overnight. If you compare that to something like Uber, and think about Uber is a technology, but relies on very real world things, right? You need drivers, you need passengers, you need cars. And that got to 100 million users in just 70 months. So, really quite incredible. And that was going like locale by locale. Then if we look at some of these other more pure tech plays, you can see this accelerating rate of adoption. TikTok took only 9 months to get to 100 million users. That's a lot of brain cells that are rotting on like 30-second videos. But ChatGPT took 2 months. And it's only accelerated. So here's another opportunity. If you have a guess, how many users does ChatGPT have? And this has been really, really remarkable. Um, in fact, we just got the most up-to-date data, but you can see beginning in when ChatGPT first became public to August, it was 700 million users. We are now at 900 million users. That is, I think, 8% of the global population. I mean, an absolutely extraordinary number. And by the way, and this is interesting, I was just looking at these numbers. The US, even though we are ground zero for building out the infrastructure, so think Nvidia, right, is based here in the US, we actually lag in terms of AI adoption. And many other developed and developing economies actually have higher percentage of usage of ChatGPT. So it's sort of interesting to see how it gets implemented. But all of that sort of like engines, building the engine, making them work, distributing them requires an enormous amount of capital expenditures. So you'll see here, these are companies and these are the hyperscalers. Apple, Amazon, Google, Microsoft, Meta. These are the companies that are sort of at the forefront of deploying these AI engines. And you'll see way back in 2022, when AI was still kind of not quite a thing, these companies were investing a lot in it, but we weren't seeing it out there in the real world yet. Those companies combined spent $100 billion on capital expenditures. Think things like data centers, servers, power. Full year 2025, they're expected to spend about $350 billion. And by 2030, we're looking at like 550-ish billion dollars. Remember, this is only 5 companies. This is absolutely extraordinary real world infrastructure that has to get built out. Now, the pace of adoption, even though it's fast, we have to remember that it's very hard to kind of forecast who the winners are going to be of this, right? So I think back, I started my career in 2000. In fact, I owned that Nokia phone. My kids saw a picture of it. And they were like, "What does that do?" And I was like, "It made phone calls, like what a phone is supposed to do." But I carried that puppy around. I probably had a sore back because of it. So they were really heavy. And at the time, Nokia was the absolute leader in cell phones. And then in 2000, I remember vividly when AOL bought Time Warner. AOL was this, internet.com first company, and then they're buying this traditional media company. Today, anybody have an AOL email address? And I promise this is like a no judgment zone. I have a Yahoo email address that I still use regularly. But so, not a lot of new people opening AOL emails or even Yahoo emails. But these were companies that were at the peak of their game at a certain point. But they weren't able to kind of like stay on top as some of these new technological revolutions got introduced. And so that's why we need to go at this with a healthy level of skepticism. All right, here's where I'm going to make everybody work a little bit. Barbie, I mentioned she's had 250 different careers. She's had way more, even different versions, right? Here are 4 that I just thought were fun. We have Malibu Barbie, Totally Hair Barbie, George Washington Barbie, and Chewbacca Barbie. Which of these was the best selling of all time? And this was kind of fun. This is part of the reason why I love my job, because I get to do research on kind of silly topics like this and actually figure out which of these Barbies was the best selling. Okay, so we have a Malibu. Yeah, more Malibu.
I don't think I've ever seen the Chewbacca Barbie before. That's a new one.
That I totally agree is a new one for me. I had never seen it before. And like my family and I are like huge Star Wars fans. We've like dressed up as the characters multiple times for Halloween. And I think Chewbacca Barbie is an abomination. I'm
Yeah.
sorry. No, no Barbie should be
Great,
able to wear
great.
that outfit. We have a couple Totally Hair Barbies. So guess what? Totally Hair Barbie was the best-selling Barbie of all time. I did not guess that. I was sure it was Malibu because I remember that name so well. And that is probably the most iconic of the Barbies. But Totally Hair Barbie was released in the 1980s, had hair, by far the longest of any other Barbie. And, like, this is a good example of where I should have had an edge because I grew up in the '80s when this doll was released. I grew up in New Jersey. I had huge hair, right? I had this competitive advantage where I should have been able to determine that this was the fastest selling, but I got it wrong. But, like, here's evidence. I had big hair, and Lena, I managed to uncover this photo. You get me, girl. Like, you had big hair too. This was the era. And we
We
thought we looked so good,
we did. We absolutely did.
right? Obviously, Claudia likes to pretend like she didn't have a big hair era, but
Didn't happen. Didn't happen.
we're gonna keep digging for some photo
Keep
evidence.
looking.
But so I just given you guys good information. Totally Hair Barbie was the best selling of all time. Now, with that information, tell me which of these Barbies is most valuable today. right? And so this is a lot of what an investor has to do. I spend a lot of my day chasing down information, understanding like what will happen to company earnings, what's going to be the impact of tariffs. And so a lot of that is like, real calculation, real numbers based. But then there's another piece to it in that how much are people going to pay for it? So if I know Nvidia is going to earn X over the next year, how much do I want to pay for that today? And that's essentially what we're doing here. And I have to say, like, based on the answers here, George Washington is in the lead. I think there are some people who are going to be on their eBays after this looking for a George Washington Barbie. Um, but in fact, I don't want to burst anybody's bubble. It's Chewbacca Barbie,
Oh, wow.
who again, I think is an abomination, but clearly there's somebody who thinks that she looks great and wants her. And so there could be any number of reasons why she's the most valuable. It could be that people just love Star Wars and they'll buy anything with it. It could be that they didn't make that many and you have just a handful of people who are diehard fans who wanted just those handful of Barbies that were available. And that's where you get into the supply demand, right? And so I think these are good examples of how difficult it is to be an investor and sort of predict all of these things. All right. So if you've watched the movie, you know that Weird Barbie is a character. And to tell you the truth, like when I was growing up, I actually wasn't a big Barbie fan. Most of my Barbies looked like this. I had a lot more fun like cutting up her hair and drawing on her and stuff. But sometimes that is the lens through which you need to look at stocks in order to identify where those opportunities are. So Howard Marks is a really well-known investor. He's been around for decades. He is known partly for his shareholder letters. You can find any of these online, and he's usually got like this very kind of thoughtful view of the market. And he says here, establishing and maintaining an unconventional investment profile requires acceptance of uncomfortably idiosyncratic. Blah, 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 blah. He's essentially saying like buy weird Barbie. You want to buy companies that don't necessarily look all perfect but have a lot of value, right? If you can kind of trim up her hair, clean off some of that stuff on her face, you could probably that Barbie would probably be more valuable than it was previously. And as we think about different areas of the market, there are a lot of other weird Barbies in the market today because focus has been so much on the Nvidias of the world. The market and many investors have kind of left these other parts of the market behind. And we have a number of different ways that we kind of slice and dice the market. This is looking at value versus growth. So value stocks are ones that are, maybe a little bit more beaten up. They're cheaper, but they might have more reliable earnings growth. Growth companies are really where AI sits, right? So those are the companies who are investing in new technologies, maybe, who are growing their earnings significantly, and they might be more expensive. So looking back, this takes it through 1994. When this line is increasing, that means value stocks are doing better. When the line is decreasing, value stocks are doing worse and growth stocks are outperforming. And so what you can see here is that this tends to go in long shifts. At the peak of the tech bubble, coming out of that, value stocks or cheaper stocks did better. And then coming out of the financial crisis, then growth stocks did better. But you can see here, we've had a very, very long period where growth stocks have been outperforming, meaning that value stocks have been really unloved and often present really interesting opportunities. Another way that we slice and dice the market is looking at large caps versus small caps. And so same thing, as this line is rising, smaller companies are outperforming. As the line is declining, large names are outperforming. So here too, kind of starting from around the peak of the tech bubble, smaller companies did better. But over the last 10 years or so, large companies have done much better. So this goes in big cycles. Um, well, we're also seeing, in addition to certain areas of the market being unloved, we're seeing a broader array of companies who are talking about AI. And this is really the promise of AI. Not just is NVIDIA going to be able to make more chips, but how do we see other companies adopt AI to do things faster, better, cheaper? And so this is looking back, starting in the second quarter of 2024, by sector, how many companies in each of those sectors were talking about AI. And you can see pretty much every sector has seen an increase in the number of companies that are talking about AI. If you look at technology all the way on the right, it's about 95% of all companies are talking about AI. If somebody could please talk to the CEO of that one company that's in the tech sector that's not talking about AI. I think that'd be really helpful because clearly, like, they haven't gotten the message that this is all anybody wants to talk about. But when you think about healthcare, for instance, AI is being used to do tons of research on different drugs. If you think about financials, some large banks are at the forefront of really thinking about, hey, how AI enables what it is that they're doing. So this holds a lot of promise as we think about the kind of lasting impact of AI. So we're going to dig into industrials for a moment because that's where I mentioned earlier that enormous amount of capex that's being spent. Those dollars are partly being spent with industrial companies. Remember, so think about those massive data centers that are like the size of a small town. Those they have to actually go to these industrial companies and say, "I need you to build this." So this is looking at a handful of industrial companies that we're calling like AI linked. And how much do they have in their backlog? So we're collecting this data now for a more recent quarter, but what you see is 24 to 25, a 14% increase in backlogs. And then when you look at their earnings calls, so these CEOs will talk about the backlogs that they have, and you'll see we actually used AI to help pull these quotes. But from Eaton, a $2 trillion backlog of mega projects, and only 15% have been started. So this suggests that we're at the very early part of this build out. And here's an example of why. These AI engines take an enormous amount of power to run. So you can see these bars are US demand for power. And demand for power has actually been like fairly flat in the US, but you see it start to tick up over the next couple of years because of this big increase in data centers. And so creating all this real world infrastructure to be able to power this is a major, major trend. And with that, we are starting to see some pickup in manufacturing. So these are different surveys that look at various sectors around the world, and you'll see how they're pretty flatlined. And in fact, anything under 50 suggests that manufacturing was decreasing. So for a couple of years now, manufacturing has really had a lot of headwinds. Earlier last year, introduction of tariffs, which introduced a whole new level of uncertainty. Despite that, we've started to see some improvement in manufacturing around the world, likely at least partly driven by this AI build out. So what's happening now? Remember that chart that we looked at earlier with Nvidia, just literally off the chart? Here, these are the same names, but we're just looking at 2025. And here you can see a little bit more differentiation in where we're seeing leadership. So interestingly, semiconductors, so these are companies that make chips like Nvidia, but don't necessarily have the AI market cornered. But in aggregate, semiconductors have actually done better than Nvidia so far, or in 2025. And so you'll see also hyperscalers, so that was like the Google, the Meta that we looked at, performing really well, but not that much better than the broad market, right? So we're starting to see the market kind of distinguish from really some of those early leaders to some of the downstream beneficiaries of AI. All right. So I love this cartoon because it just captures where I think everybody is. So, this one lone guy saying, "Who are we?" And they say, "We're CEOs. What do we want? AI," right? Like that. We saw that chart showing earnings discussions all talking about AI. And then the guy asks very innocently, "AI to do what?" And all the CEOs are like, "I don't know." When do we want it? Right now. So I certainly relate to that because it feels like there's this gold rush and people haven't quite figured out what they're going to do with AI, but they know that they need to be there. And in fact, I just came across a bunch of really great quotes from like Mark Zuckerberg and Sam Altman and OpenAI acknowledging that they may be overspending in AI, but they're determined to keep doing it, right? So in the meantime, we're seeing companies, individuals trying to figure out how to use AI in order to make themselves more productive. And it's not like a straight line. Robert Solow, who won the Nobel for economics, came up with this idea that it takes a while for a new technology to actually be able to improve productivity. So he made his name looking at the introduction of personal computers. I still remember the first Apple IIe that my dad got. He was writing his dissertation for his PhD, and he moved from an electronic typewriter to the Apple IIe, changed his life. But it took a while. Right, he had to learn how to use the different functions, he had to get the dot matrix printer working, right? And so a lot of times when a new technology is introduced, it actually slows us down because 'cause we're trying to figure out how to incorporate it into our day-to-day, and we have to figure out what it does and what it doesn't do, and that's really kinda where we are right now. If you look at, companies, who are spending in what we're calling generative AI, so this particular study comes from MIT. Of all the companies that they surveyed, collectively, they were spending 30 to $40 billion in AI. So we talked earlier about that 350 billion that the hyperscalers are spending to build out AI infrastructure. These are companies that are looking to use AI. Of all of those companies, only 5% have actually seen an economic benefit and seeing a positive return on those investments. That doesn't mean that they won't see one in the future. It doesn't mean that they're going to stop spending, but I think it does highlight that we're very early on in this AI adoption. And if you look at at the top, we have general purpose LLMs. So that's like the ChatGPT and whatnot that many of us are probably using. But if you think about task specific generative AI, so this is AI doing something on a repetitive basis, taking notes, answering phone calls, answering questions. Only 5% of the companies surveyed have actually implemented a task specific Gen AI. That will increase for sure, but it has a long way to go. Here are some of the things that are challenged, right? AI doesn't work in edge cases and it actually can't adapt. It takes a lot of work to sort of explain to AI what to change. Can't be customized, too much manual context every time. Doesn't learn for our feedback. What doesn't show up here is that it lies. There was this great academic research paper that was just published talking about in certain circumstances, even when AI engines were told not to lie because of the competitive nature of the experiment that they were doing, the AI engines ended up lying or exaggerating anyway. So these are all things that we're going to have to contend with that are real, genuine risks. But here's the thing. This particular quote is from a book by Jeff Colvin, which I think is great. His first book was called Talent is Overrated, and then his second book was Humans Are Underrated. And this was published before the AI revolution, but very much came about and examined these other periods of technological change and how, as a new technology was introduced, there were a lot of doomsayers, a lot of people that were worried about the impact. And he documents how those like worst case scenarios didn't come about. But what he does highlight here, the new high value skills are part of our deepest nature, abilities that literally define us as humans. Sensing the thoughts and feelings of others, empathy, working productively in groups, building relationships, solving problems together. And in fact, like I mentioned earlier, I have 3 teenage kids, and I think a lot about this. As they're like on their phones all the time, they actually have fewer opportunities to be able to develop those social skills, to be able to lean into their relationships. What that means is that anybody who's able to do that actually becomes more highly sought after because fewer people can do it. So as we think about sort of enabling this AI, there's also a lot of data to suggest that people who work in teams with AI actually get the highest rate of productivity and output, but any one of those things on their own have lower, right? So it's all about sort of thinking about how this AI tools can make us better, but it's not about handing stuff off to them. So, for those of you who saw the movie, you'll remember there's this moment towards the end where Barbie has left Barbie land. She's entered the real world. The real world is pretty ugly. She gets made fun of, she gets thrown in jail, she gets lost, and she ends up on this bench where she's next to an older woman. She's never seen an older person before, right? Because she's been in perfect Barbie land. And she starts to cry, right? So there's this moment, a tear rolls down her cheek. She has never had this experience before. But it also happens to be the moment when she decides to stay in the real world and to not go back to the fake Barbie land. And to me, this is a lot of the tension that we have, where a lot of times doing the more difficult thing and being in the real world is actually the better answer for us. But again, AI can supplement that, but it shouldn't replace it. So I'll leave you guys with the most wonderful Barbie quote. It was the best day ever. So is yesterday. So is tomorrow and every day from now until forever. And lest anyone forget, let's just those big hair days. Who wants to forget that?
Oh my goodness.
Great pictures. Thanks, Kara. That was great, and you covered a lot of stuff. So in preparation for this, the investment committee was really excited for this presentation. So we came up with a few questions. We've got some. I'll kind of start with
Okay.
AI theme. I think questions that we get the most from clients. The first one is probably is AI in a bubble? Are we approaching a bubble? Is this anything like the tech crash of before? And how should we think about that?
Yeah, and this I get this question a lot. My mom is always my sort of bellwether. She was an English teacher for many, many years, so very smart woman, but not into finance. So when she's asking me, is AI a bubble? I know it's on a lot of people's minds, right? And as you can imagine, like we think about that a lot too. And I'm particularly sensitive to it because I mentioned earlier, I started on Wall Street in April of 2000. So it was almost exactly the day that the Nasdaq peaked. And the first couple of years of my career, we're just watching tech stocks
Mm.
get the snot beat out of them. And then I also lived through the financial crisis and housing bubble bursting, right? So these are like really important events that we want to be cognizant of. The short answer is that we don't think we're in an AI bubble. Um, but the amount of money being spent today, at some point in the future, is we're going to find too much has been spent. But that we were still early enough in this real world build out that we don't think that we're in like a full blown bubble. And I'll give a couple examples. So one is we look a lot at valuations. So if you compare the valuations of the Nvidias of the world and some of these other companies, they are quite high relative to history, and the S&P 500 overall valuations are high relative to history. But when we compare those like big tech names with, for instance, the tech names in 2000, the names in 2000 had much, much higher valuations, meaning that the earnings that those companies were putting up were much smaller than the companies that we're looking at today. So there is a tremendous amount of earnings power behind like Meta and Google and Apple and all of those. Now they're starting to spend more than their earnings or excuse me, then their earnings are growing. So there are only so many years that they can continue that, but it does tell us that they have plenty of runway. When we look at credit markets are very comfortable with like the amount of leverage these companies are taking on. And interestingly, when we look at portfolios, so we get to see a lot of client portfolios, and there's also industry data that looks at this. For like at least 3 years running, the sector that is most underweight in client portfolios is technology. So you haven't in 2000, you had everybody and their mother opening up an account, taking out margin, right? Borrowing money to go buy these dot-com stocks. And while you have had some money go into what we call like meme stocks today, you haven't had near the amount of sort of participation that we've seen during other bubbles.
Great, thank you. Um, Kind of related to that. So, and as AI and everything, adoption speeds up. Also in the investment world, we're seeing more and more new types of investments come out, right? And they're coming out really quickly, and they don't have long track records, and they're owning all of the things that everybody is talking about. How do you go about approaching investments into some of those new, whether they're ETFs or managers, or are you weary of those?
I tend to be like fairly skeptical in general, and that doesn't mean that these aren't like interesting opportunities. But when I look at kind of so the nice thing about being in stocks and bonds is that we have hundreds of years of history. And so I'm a data geek, right? So the more data I have, the more confidence I can build. What we can see is we have like a really good understanding about how stocks and bonds kind of move in cycles. And for a 200 plus year period, stocks have been remarkably good at building wealth over time. So that's a pretty great starting point, right? When I look at that on a real basis, so take out inflation, but on a real basis, stocks have fairly consistently delivered about 6.5% of return. That's you growing your wealth every year. I'm a big back to basics, and your starting point is a really great one. That said, for the financial industry has a tendency to like complicate things. It's a lot of really smart people. We have a tendency to like, you'd be like, oh, this would be cool. And that complexity is not always better for your portfolio. And in fact, when we were just looking at these numbers, the number of ETFs is actually greater than the number of stocks today. So what that means is that we have this like sort of fixed pool of stocks, and then ETFs are people just sort of mixing them up in different ways. And so, we and then throw in things like Bitcoin, gold has generated a lot of interest. So my advice is always like I don't know if those are going to continue to go up or not. I don't have a crystal ball. If you do want to have exposure to them, keep it really small because their track records are less reliable and really growing wealth over time.
Great, thank you. And going back to your theme of weird Barbie, how big a part of your portfolio should weird Barbie be? Are we going all in, or is it something that should be you have a little bit of it in it?
Yeah, it's a great question. And so, so Weird Barbie makes up a large portion of the S&P 500. So if you have exposure to S&P 500, you own Nvidias and the other ones in the world, but you also own a lot of other stuff. That said, the S&P 500 has become more geared towards those like Magnificent Seven names that we were talking about. So generally, where we would look to have some more exposure would be in somewhat smaller cap stocks, right? Think like mid cap, small cap, and then also outside the U.S. So a lot of people don't realize that in 2025, emerging markets were the best performing asset class. And that's an asset class that for years I've gotten pushback from people saying like, why do I have to own these names? Well, they do really well sometimes. And so I think you can also find that exposure outside the US.
Great. Good segue into a kind of broader market question and just how we're kicking off the year here. But are you concerned about the geopolitical risks that are starting to arise, particularly developments in Greenland? And what, if anything, are you doing in your portfolios to mitigate that?
Yeah, so the answer to that question is always yes. Um, and full disclosure, I have 2 degrees in international politics. So before I landed on Wall Street, this what I studied, and this is what I really dug. So sometimes when we get to these topics, I feel like I'm coming home a little bit. But the fact is, it was interesting, like coming to Wall Street, and I'm like looking at all these like geopolitical things that are blowing up. And early in my career, I was like, well, we have war in the Middle East. Like, why is the S&P not doing anything? And the fact is, because US markets tend to be remarkably insulated from a lot of geopolitical risk. So I've had to be able to temper the headlines versus how it's going to impact the markets. And so like the direct answer to your question is that I think that yes, geopolitical risk has definitely increased. And we had from the time that like I was in grad school up until fairly recently, we had what was often described as like a unipolar world, right? You had the Soviet Union that went away, the US was ascendant. You have free trade where we have this idea that, relatively open borders for goods. And that really dominated a lot of the discussion. And there was a very deliberate view that having more integrated economies actually made political risk lower. Now that doesn't work 100% of the time, but there was a very deliberate sort of political goal, also in having free trade. And I think with the Trump administration, and you can agree or disagree of whether this is right, but with the Trump administration, they have introduced a very different view of the world, right? Where we don't necessarily want a whole lot of global trade agreements. We don't necessarily want, NATO and you mentioned like the Greenland and the Venezuela. This is the US kind of acting much more unilaterally. So we're moving from that kind of like unipolar world of the US to a much more multipolar world. What that means is that it will have a lot of impact and there will be a lot more headlines. Greenland was resolved this morning, but like we'll have something else, right? So we should be prepared for that. All that's to say, markets are not reacting. So the things that I look at are VIX. So what's the overall volatility being priced into the market has come down. Move, what's the volatility in treasury markets? That's been very moderate. And then when we look at oil, oil tends to be the big transmission mechanism by which risk moves from outside the US's borders into the US. And oil is actually down. So all of those things are telling me the market is okay. There might be some day-to-day moves based on headlines, but the market is not really worried about any of this geopolitical risk impacting what they really care about, which is corporate earnings.
Right. Um, I have one more question for you, but before that, I'll pause for a second and see if we have any questions from the audience. If you have any, you can put them right in the chat. So we'll just pause for just a second. If not, I'll take the last one.
I can send out links to the George Washington Barbie for anybody who wants them.
Perfect. Perfect. All right. Well, I don't see any coming in there. So if we could maybe just close it out and just give us a very brief outlook, kind of maybe for 26, what are the one or two things that maybe you're keeping an eye on or that changed from last year to this year that our clients should be aware of?
So it still continues along that theme of Weird Barbie. I'm not going to call it Weird Barbie forever, but continuing to look at some of those areas of the market that have been overlooked. And what we've seen is the Magnificent Seven names have had a smaller and smaller contribution to the overall return of the S&P 500. And the S&P 500 last year had a smaller contribution to like a diversified portfolio returns. So making sure that clients are exposed to some of these like weird Barbie areas. And again, I'm not saying that Nvidia is going to take a dive, right? I just think if we're seeing the promise of AI actually come true, we should see it showing up in other names. And you want to make sure that you're able to have exposure there. And then outside the US, I think is really important. I think a lot of people, this is where I mentioned earlier that many US investors are underweight technology. Um, so that's an opportunity. But many US investors are very underweight non-US stocks. So that's another area to really look at and make sure that you have the right amount of exposure.
Great. Thank you, Kara.
Yeah. Thank you so much. We appreciate it. And, keep those questions coming in and, Claudia and I can get back to you and answering it. And Kara, we really appreciate your time and being able to share all the weird things about, AI and Barbies. And I'm still traumatized by both the pictures and Chewbacca Barbie. So thank you for
Oh
that.
my gosh, that's really lovely. Thank you.
All
Thank you
right.
so much. It's so great to see you guys.
Yeah.
Absolutely. And then stay tuned for our next quarterly Wealth and Wellness webinar from Claudia and I. You'll start to see some of those things post over these next few weeks. So thank you all. Take care.
Take care.